Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, August 7th, just after the close. Bid continued in equities throughout the week. What did we like? What did we see that we were impressed with? Well, we've been mentioning the market action is broadening. We're seeing a bid to the previously beaten down value names. Banks, financials, industrials, very solid week in industrials. We've seen some of the defense names rise. We've seen some of the aerospace names rise. So what we want to keep our eye on is this action we're seeing right now a catch-up trade from cash on the sidelines? Don't forget, massive cash on the sidelines through April due to that 35% S&P swoon in March. Some of that cash is coming back into the market, but very hesitant to pay some of the growth multiples, it would appear to me. So that's the on one hand, and on the other we have right now. Value's acting better than it has. Is it being supported by new cash coming in, or are we seeing a rotation out of some of the growth names, or a combination of both? Growth didn't trade poorly this week. Solid moves in many tech names, solid moves in biotech, solid moves in medical devices. So there was a bid there. Just for the first time in a while, we're starting to see in multiple weeks a steady bid to value. Again, industrials, basic materials, banks and financials, very solid. Keep an eye on that. Small and mid cap, impressive. Have outperformed large cap again this week. Again, are we seeing a reversion to the mean trade there? Or is new money coming in and looking for new ideas? Maybe concerned about the Qs, NASDAQ 100, trading at levels where it is. Maybe concerned about some of the moves that have gone on in the four horsemen, or the five horsemen, or the six horsemen that we talk about. Your Amazons, Apple, Microsofts. So very interesting to us. As long as we get that breadth, as long as money is looking for new homes, the market should retain a bid. We'll certainly have pullbacks. Are they 3%? Are they 5%? Are they 8%? We can't answer that. Have to be aware of that. Have to have a little cash on the sideline to try to take advantage of that. But overall, positive action in equities. What concerns us in equities would tend to be more on the options trading and some of the excitement of analysts. We're seeing big upgrades in earnings estimates from cuts just three months ago. That type of excitement, targets going higher, 3,600, 3,800, 4,000 on the S&P. As funny as it may seem, the market sets itself up better for success when the mass of analysts are negative, expecting the worst. So we're seeing a little bit of sentiment from the institutional crowd getting a little frothy. Normally we talk about it from the speculative crowd. We're seeing it a little bit on the institutional side. John has a video on fixed income. We look at that treasury market, kind of evened out this week. If we were trying to find an area that would concern us in the market, it would be that constant bid to treasuries that tends to be a risk-off trade. But again, we can't ignore that massive Fed liquidity. Has to find a home somewhere. They are a bid on treasuries. They're a bid on high-grade munis. Those are areas that have rallied, continue to rally, and have been well bid throughout. In the muni deals this week, mostly oversubscribed, some to the tune of 3 and 4 and 5 times, according to our muni traders. So we're in August, volume a little quiet. Week to week, we try not to overreact one way or another, and we'll keep looking for reasonable levels with reasonable risk reward to put your capital to work. Have a great weekend.
Hi, it's John Mousseau. I am the president and CEO of Cumberland Advisors and director of fixed income. It is Friday afternoon, August 7th, about 12:30. This week in the bond market, we saw Treasury yields basically end up where they were at the end of last Friday. Think about the 30-year Treasury bond, about a 123. Think about the 10-year Treasury bond, about a 0.56, pretty much within a basis point of last week. Muni yields down. What happened this week? We saw yields grind down, concern about the economy, concern about the slowdown in economies, particularly in the south of Florida, Texas, California. We've talked about that, where there's been a resumption of the virus. However, today, some better news when you look at the jobs numbers. Payrolls were 1.7 million, expectations were 1.4. Payrolls higher, unemployment lower, 10.9 to 10.2. Concern going forward, though, because the pace is actually slowing from the improvements that we've seen before. So there's concern out there that indeed some of this resumption of the virus is slowing down things in certain parts of the country. A lot of this is going to depend on the vaccine. Clearly, the stock market has started to discount a vaccine into prices in stocks. My colleague Matt will talk about that. Where we see it, next week's going to be telling. We're going to look at CPI and PPI, Consumer Price Index and the Producers Price Index. We think that inflation, which has been benign and lower, could start to even out, and by next year be higher. Part of this is the fact that we've looked at what the Federal Reserve has told us. They are now less concerned about inflation. They are willing to sustain higher levels of inflation to offset periods of lower levels of inflation. Our own viewpoint is that the bond markets will care only about what's happened recently. What have you done for me lately? And if inflation starts to creep higher and looks like it's on a path towards higher inflation rates as you go forward, you will start to see some changes in the bond market from the low levels where we are now. Does that mean high rates? No, not high rates, but higher rates. So as we move forward, we're hoping that continued hope for a vaccine helps markets. We expect to see continued robust demand for munis, in part because I think the market is starting to see the potential for possibly a Biden victory in the fall. There is no question in our minds that means higher tax rates. If you get higher tax rates, it makes the value of all municipal bond portfolios higher than they were before relative to everything else. So with that, we hope everybody has a great weekend, and we look forward to seeing you next week. Thanks a lot.